Hi, this is John Reinhardt, and welcome to my Brooklyn housing market update. This is October of 2021, and I'm going to be speaking about the first 9 months of the year and going forward towards 2022, what we predict is going to happen in Brooklyn and beyond. The real estate market on the national level, taking it down to the local level, and make a determination if this is a good time to buy or to sell. Stay tuned. I'll be right with you. Welcome back to the Brooklyn Housing Market Update. I'm going to be going over today the market in Brooklyn and the market around the country and how to make sense out of what's happening in this marketplace, what's going to affect us in the future, and what are the statistics of how we've been doing this month and the last few months. So let's dive in right now and talk about the Brooklyn housing market. Before we discuss Brooklyn, let's talk about the national housing market. You remember last year in Manhattan how the market really tanked? Prices were really going low. People weren't looking to buy. I had some apartments to rent. Nobody would even look at them at the time. People were afraid of the vertical buildings, Manhattan, and it was a big deal. So people were moving out of Manhattan and they were moving to other areas. This also happened in certain parts of Brooklyn, and the statistics will show those areas on where that happened. But let's talk about this year now. This year, it's been really interesting to see. You know, Manhattan, us New Yorkers, we fight, but we come back with a vengeance. And that's what the Manhattan real estate market has done. It's up around 15%, and that's a good sign. It's a healthy sign. People are buying again, people are renting again, and people are going back to Manhattan, getting back to their daily lives. Same thing's happening here in Brooklyn. So people that ran away are now coming back and happy to be back, and prices have still gone up in Brooklyn, certain areas more than others. Let's take a deep dive and see how that is. Let's look at some of the other markets around the country first, because I think it's interesting to know how it's going there and then determine what we think will happen here in Brooklyn. Florida. Wow, I've been studying Florida a lot lately, but it's an interesting market to look at. In Florida, prices have gone up 30% in some areas, and inventory is down 50%. So there are fewer homes on the market. That's what really causes homes to go up in price. The same people are bidding for fewer homes, and they really want them. They wanted to get out really, really bad last year. I don't know if they're going to want to get out really, really bad this year. They're going to want to, move on with their life because it's changed the way we look at things. But I think that that's going to slow down a little bit too. What happens though, inventory is down low, but it's going to start picking up as we see now. Already signs of improvement in inventory. Sellers are seeing these crazy prices. They weren't looking to sell, but now they're saying, wow, if I can get $500,000 for my house, I'm going to put it on the market. So more homes will come on the market and prices will start to come down. They see that already. There are more price breaks on the market than I've seen in over a year in Florida. And in some areas more than others, some still not going to see any, but some areas have already started to adjust and new homes on the market are coming in at more realistic prices. Still inventory, though, if you look in the big picture, things are way below normal. So another nuance there. Let's see what happens with the demand. We'll talk about affordability. How can people afford the homes at the higher prices? And if the interest rates go up, that's going to really change things as well. So there are a couple of dances that we're going to be dancing around in this conversation today to see where you stand and how we can help you to make a determination if it's a good time to buy, if it's a good time to sell. Is it right for you? Where are you at in your life? What are you looking forward to be doing? And let's look at each market individually to really hyper-analyze and see if it does make sense. Interesting statistics are happening already. In Washington, D.C., in 10 other cities and towns around the country, prices have already started to come down. Inventory is building up, and we see so much activity in these marketplaces. Some prices actually even less than last year. So last year, the prices were at a certain level. They went up, and then now they're coming down again. So it's interesting to watch how this is happening. And some people are really predicting a major crash in some marketplaces, like Florida or places that have gone up so much. I don't know if I agree with that, but I'll tell you what, it's interesting to watch because they went up too fast. Did they? Is the demand still there? We don't know. Is the demand going to be there when the interest rates go up and affordability goes down? Not too sure. So it's something to watch. So if you're interested in looking for a house, looking to sell, maybe relocate, let's take a deep dive and look at your situation to see what it would be like for you. Now, in different parts of Florida have had major, major differences in appreciation rates. Some areas went up 8 to 12%. Some areas went up 30 to 40%. So we need to dive deep into those areas. Brooklyn, same thing. Some areas have gone up. Some areas have leveled off. Some areas have even decided to go down a little bit. Whatever area you're in, we need to take a deeper dive to see what the marketplace looks like, because it's different and it changes all the time. And each neighborhood has a different profile. But it's interesting for investors too to take a look at these things. You know, some areas there'll be a bigger risk, but in those areas too, there'll be bigger rewards. So depending on your scenario, your situation, it may make sense to do it now. And in some areas, just may not. So let's look at Brooklyn numbers, right? How are we doing in Brooklyn? The average sales price has risen from $950 to $975. It's up 2.63% from last year. That's average now. Some areas it's gone up a lot more than that. Some areas it's gone down a little bit. But let's look at these numbers as a general way to analyze these information. And then when you need to dive deeper, let me know and I'll be happy to dive deeper into your specific area. So even though we're at 975, we are still down from 995, which was the average sales price last month. So things are starting to trickle down. Is that going to be a trend? Is it just a blip? Let's see. We have to wait and see how this pans out. So keep an eye on that. Something that's not a done deal anymore, where the prices are going to go up and up and up and up. We start to see in New York, as we've seen all around the country, many, many marketplaces, they've already started to trend down. But, you know, we look at it in the long, big picture of things. If you're looking to sell, it's a great time to sell. Prices are up so much more than they were just 2 years ago. So it's a great way to capture some of the money that you have in your equity in your home if you're looking to do that right now, if it's right for you. Depends on what your need is, what your purpose of selling is. But for those people who want to get the most out of the house, the market is great right now for that. And we'll talk about a couple of reasons why it's such a great time right now. Brooklyn inventory is off by 25%. Look at that, right? The lowest of the year. 1,236 homes were on the market in September. Average, we have about 1,500 homes on the market in the same month, and just down about 25%. So inventory is down. That's no secret to anybody. I think we all know that. But it's still out there. It's not so bad. It was worse, and now it's picking up steam again. So inventory is starting to pick up. We look at the closings in Brooklyn, and sales are down 20%. So the number of homes that have sold is 347 in September, and August we had 428. So look at that number. It's considerable, and it's no surprise why that's happening. The inventory is lower, so how can you sell homes if they're not on the market? And then we're not sure about buyer demand. In some areas, there just aren't as many buyers coming to our open houses. There aren't as many buyers that are willing to pay the top dollar that the prices have gone up to. So there are fewer buyers looking to pay that money. They're thinking it's going to come down. And so it's all got to shake itself up in a couple of weeks. New contracts, also there are 396 in September versus 442 in August. That's down 10%. So fewer homes are actually going to contract. Again, inventory challenged. Some of the products of the marketplace that we're in right now. But again, if you look at the market over the last 5 years, it's a great seller's market. It's a great time to sell. It's surely a seller's market. It's not a buyer's market. We're nowhere near that. But it is heading more towards it as inventory rises and as fewer homes sell. Those people that want to sell or have to sell are going to start to be more realistic in their prices. And you'll see more price breaks hit the market than you have in the past. But homes are still selling fast, right? 50 days is what our average time to sell. In just 2 years ago, it was 83 days was the average time. So that's faster. So that's a good sign of the market. We have a healthy, vibrant market. The other note I found was the number of expired listings that we have. So that means people that came on the market and then decided to not sell or not accept any offers. And they've gone up, climbing from July 277, August 292, and then September 341. What's interesting about that is people saw the houses go up in price. And they said, you know what? I'm going to put my house on the market. This guy got $750 for his. Mine's nicer. I'm going to ask $850. So they weren't really realistic in what they were doing, but it was realistic because back in the day, people put their houses on the market for more than we thought they were worth. We're the professionals. They're even more than we thought they were worth. And then we're like, whoa, it's sold. Oh, how could that be? But it did happen many times. And so that's what they kept on doing. But now it's starting to catch up. And the market's starting to correct itself, and people aren't just paying anything. They're now being more realistic in their price expectations, and so therefore they're going off the market by expiring. So they're saying, you know what? How many times have you heard this? If I get $1 million for my house, I'll sell it. So a lot of people are out there just saying, if I get. They really don't have the desire or motivation to move. So they're expiring now, going off the marketplace. But new ones will come in and replace it. Here's what I'm concerned about: affordability. So the rates go up. Prices go up, affordability goes down. How can you afford it? If the interest rates are going up, the prices are going up, how can you afford these homes? Affordability goes down. There are fewer buyers on the market. And then there's another chance for price corrections. And, in some areas, again, in the country, it's already happening. Not so much in Brooklyn. Certain parts of Brooklyn, maybe, but not so much as a generality in all of Brooklyn. Here's what scares me: the mortgage rates. That's what makes the affordability so challenging and so much of a question mark. The mortgage rates are increasing and demand is decreasing. And so far, by 10%, there are fewer homes, fewer mortgages in October than there were in September, 10% down. And that's down 16% from last year. So, people are not so anxious to get their mortgages to buy their homes. And again, that's part because of the inventory, but it's part also because the rates are going up a little bit. This is an interesting statistic. The jump in mortgage rates followed signals from the Federal Reserve that it could start tapering its purchases of mortgages and long-term Treasury bonds as soon as November. What does that mean? If the Fed's not going to be buying those bonds, then what's going to happen is the rates are going to go up, and it's already started to happen. Rates are already over 3%. They were below 3%. They're 3.1% now, and they're predicted to go up to 3.5% by mid-2022, and then even more. Some are predicting after that. So what happens when the mortgage rates go up? Mortgage rates can now cool home price appreciation, which we see already for many reasons. But that's one thing that adds to that column of activity. So prices can not decrease in all areas, but they won't appreciate as much. And, so people are welcoming that. They're saying, you know what, maybe I can start to buy, because if prices don't go up and if they even come down in some areas, then I might have a chance to buy. But when you look at this in the big picture, what happens? The rates were so low and the demand was so crazy after COVID. That's what caused this flurry of increased activity. Now that the rates are going to head up, we don't know if we're going to have that flurry anymore. But if you look at it in the big picture things, I started back in 1978 in real estate, 43 years ago. Interest rates were 18%. Can you believe it? I sold homes at 18% interest rates. Today, they're 3%, maybe 3.5% if they go up a little bit. Not the end of the world. If prices are correcting, it's not the end of the world. And in just 2018, the rates were still 5%. Here's the concern that I have. In last time that the rates went up 1% in a short period of time was in 2013. And home sales dropped 10% because affordability, and people couldn't afford it anymore. Price growth slowed, and some predicting that this might happen again. If the rates do go up quickly, and then it's going to change the market that we're in. So I'm a little concerned about that. Keep an eye on that. If you're looking to sell, this is an interesting time to sell, because if the rates go up, there'll be fewer buyers out there. Now there are more buyers on the market. So that's pushing some people who were hemming and hawing about selling to sell now. So this is an interesting example. I want you to know, if you're a buyer or if you're a seller, why this is an important fact. If a home buyer can afford to pay $2,000 a month, right, at 3% rate, which it is about today, they can buy a home with a 475 mortgage, whether it's a 550 home, 650 home, well, it depends on their down payment, but a 475 mortgage. At 4%, they can only afford a 420 mortgage. At 5%, they can't borrow much more than 375. So look at that. The rates go up, they can afford less. So you kind of, I don't know if I want to buy now because the prices are high, but you don't know if the rates go high, then you have another sword. It's a dual-edged sword. You have another issue to deal with, because what really matters is what it costs you per month. So this is what buyers are looking at, and they're out there now looking. So this is the dance that everybody's trying to do. Do I buy now at the lower interest rate, pay a little bit more, or do I wait, pay the higher interest rate, pay a little bit less? Good question. So really what it ends up being is, what's important to you in life. Life is short. Let's do what we have to do, move on with life, and, make the best financial decision that we can do along the way. Rule of thumb is a 1% increase in the mortgage rate decreases their buying power by about $50,000. So if the rates go up 1%, then, if you're selling your house, that same buyer can't buy it anymore. Well, that same buyer is willing to pay you $50,000 less for that house. Okay, so interesting fact. Keep it in the back of your mind. But that's only one fact of the so many things that we've been talking about today. Again, this is a simple analysis, of course. It's very simple, just to try to make it easy for you guys to understand and easy for me to explain even more. But, it's not taking into consideration your taxes, your fees, down payments, all of that stuff. So here's the prediction again from NAR, National Association of Realtors, that the rates are already over 3%, and they're predicting 3.5% by mid-2022. Let's try to wrap it up, and then I'll be here to answer any questions whenever you'd like to. So in Brooklyn, it's all about the neighborhood, right? Everybody knows that. So if you're looking to sell, some areas went up more than other areas in Brooklyn, and some areas are on a trend to go up even more. So I'll help advise you with that. Some areas are not growing as much. I'll help advise you with that. If you're looking to move from one part of Brooklyn to another, it's an interesting dialogue as well. Because if you're moving from one area to another area, and your area, it goes going up 10%, and the other area is a hot area, what I call a hot area statistically, and it's going up 20%, maybe that'll help you to understand it. Maybe it's a good time to move right now while the rates are still low. So let's take the deep dive. The point is this. It's not a simple answer for anybody. There are many reasons whether today is a good market to buy or sell, and there are some reasons why it's just not. And it's not right for you, and maybe it's better to hold off and wait. But the point is you need to discuss this in detail and in depth. I hope that today you have at least an overview as to what's happening in the market, and if there's any way that I can help you to help you determine if it's a good time for you to sell, good time for you for buy, or just if you're just listening to this to find out what the market's like, then stay tuned. We'll do another one of these very shortly. But if I can help you in any way, that's what I'm here for. Doing this for 43 years. That's what I love to do. I love help people finding their dream home. If I can help you, let me know. Thanks for watching. I appreciate it. Have a great day.